Hi, everyone. Welcome to the Mission for Freedom podcast. Happy Tuesday to you. Happy tax day. It is April 15th, and we are so excited to join you today and connect with you. We are live on Mission for Freedom's Rumble page, YouTube, and then X American News. That is a phenomenal channel. If you're not subscribed, you definitely want to follow them. We are live on X American News' Rumble page as well as their X account. And then, of course, our amazing producer, Annie Cyrus, we are on her Facebook page and her YouTube channel as well. So we're on 8 different platforms today. We're great. We're excited to join you. Whatever platform you're on, if you will go ahead and just click the follow icon, and that way you will be notified when we air, which is live every Tuesday and Thursday at 4 p.m. Central. And we are live for you so that you can join us, connect with us, and we'd love to hear just your thoughts about what's happening locally in your area or what you'd like us to talk about as well. So we're here for you. That's why we went live. And then we also want to thank our amazing sponsors and affiliates, Ina Cyrus with her Live Up to our LUTF, studio.com. She is an amazing artist as well as producer. And then also My Pillow, Mike Lindell. He is an amazing patriot and has a million different things at mypillow.com. And on both of those channels, you can, or websites, you can just type in mission and you will save money and support the Mission for Freedom podcast as well. I am incredibly excited today to be live because I think it's just not very often that we get to talk with a world renowned expert on precious metals and the geopolitical monetary situation happening today. What an honor it is to welcome to the Mission for Freedom podcast, Andy Schectman. You know, Andy is probably one of the most humble, smart men I know. And I've met a lot of educated people. I used to be a pharmaceutical rep, called on a lot of physicians, very, very smart men in the medical field. And that's what I love about this podcast is that, you know, we're hitting different pillars that affect our freedom financially, medically, politically, educationally, and religiously. And these are pillars that I believe are the foundation of any society. And so I think it's important to talk about and pursue freedom on all of those levels. And so today we are so incredibly honored and blessed to welcome into the Mission for Freedom show today live Andy Schectman. As I said, he's been doing this 34 years. He is a world-renowned expert and speaker. He speaks all over the world. And what I like about Andy, he has a podcast called Little by Little, and it's this algorithmic decay kind of rhythm that he talks about how, you know, it just is all of a sudden, I mean, it's little by little, then all of a sudden something happens and you scratch your head and you're like, how did that happen? When really it's been happening all along. And that's what I love about him. He's like a sleuth, a financial monetary sleuth, and he starts putting these pieces together and figuring out what's going on. And so that's why I love having him here today, because he's here for you to answer your questions and to just give us some wise, educated perspective on what's happening geopolitically. So, Andy Schectman, a founder and CEO of Miles Franklin Precious Metals, welcome to the Mission for Freedom podcast today.
Oh my goodness, you're amazing. It's so hard to live up to that one, but thank you. And it's an honor to be here as well. Really is. I always have been honored to chat with you, Miriam. You're one of the good ones in the industry and and authentic. And to me, that's everything is, authentic and down to earth and honest. That's what means everything to me. So thanks for having me.
Well, and speaking of honest, you know, that is why you know, actually cashed out my IRA. A lot of folks, you can roll it over without any, you know, penalties or tax penalties as well. But I did just because I wanted it. I could see, I was listening to a lot. I could see what was happening on the horizon. That's what felt comfortable for me. But why I chose Mile Franklin, and then you allowed me to become an outside broker, which I'm so honored to be. But I really loved how you treat every single client like a family member, and you treat your clients like you have like this boutique of this phenomenal level of customer service and honesty and integrity with not one complaint in 34 years. And so that's why I love your company and Miles Franklin so much, is because I think with gold and silver, folks can get a little like, oh, I don't know if I trust them. Will they buy it back? How long have they been around? Are there any complaints? And you guys are the cream of the crop. And so I'm just so honored to be a part.
Well, I want to thank you for that, Miriam. I really do. It means a lot to me. And this industry lends itself to a lot of bad actors. I have been on a few shows recently talking about IRAs in particular, which we have found that there have been a lot of people that have fallen victim to some very uh, predatorial companies and predatory tactics. And without going too deep into it, I'll just say what I've said on other shows, and that is that if you've purchased through your IRA from companies that are endorsed by high paid public spokesmen, typically what um, these companies are selling are all the same thing. It's very strange. I have a friend who worked for Stratton Oakmont, who is the Wolf of Wall Street, and Jordan Belfort. And I asked my friend Eric, I said, "Did you get in trouble?" He said, "Andy, I left as soon as I found out what the hell was going on." He said, "A lot of the guys that I came in with ended up leaving and starting their own company doing the exact same thing Jordan was doing, selling the exact same stuff. And many of them went to prison." And it stuck with me because there's about a half a dozen companies, very well known, all over the internet, sometimes on TV. I won't mention their names, but they're all endorsed by high paid spokespeople. I did an interview with Mike Adams the other day, and I can say this because he said it out loud. He's the health ranger, one of the smartest guys I've ever met, and he said he was offered 100,000 a month by one of these companies. Anyways, they all sell quarter ounce gold coins to their clients from mints you may have heard of, like the Canadian Mint or the Australian Mint, but coins I've never heard of in 35 years. They and very often are able to have their own coins made by the mints if they agree to a sufficient enough quantity and they have an exclusive on it. In reality, they try and portray these coins as being super rare because of the limited mintage, when in reality they're nothing more than the gold content. The dealers around the country want nothing to do with them. No one buys them. There's something in business called the cost of carry, where if you hold something on your shelf that has no demand, it sits there. That's the cost of carry, collecting dust instead of moving. Like when you sit having a cup of coffee in an expensive restaurant with your friend for 3 hours, you get the evil eye from the
Yes.
wait staff, "Get out already. I'd like to make," but that's the same thing with inventory. Anyways, they all do the same thing. And Miriam, when I tell you it's horrific, I, honest to God, um, it's the most horrific thing I've ever seen, ever, in 35 years of business. All sell quarter ounce gold coins priced between 950 and 1200, and usually fractional silver coins ranging from half ounce, 3/4 ounce, 1.5 ounce. The Royal Canadian Mint will not let you buy 1 ounce coins if you make them for yourself. Miles Franklin made some 2 ounce, my company, 2 ounce silver coins, Canadian Rockies. I sell them for the same price I'd sell a Canadian maple leaf for. These companies sell them for massive premiums and say that they're rare. They have destroyed people's lives. I was at a
Wow.
conference in Ottawa, Canada recently, and a man came up to me with his wife in the other room after I talked about this on stage, crying. Said, "If my wife figures
Oh,
this out, she's going to leave me. Please help me." And we've helped a lot of people, tell them what to say, what to do. But this is pervasive and it's everywhere. So if any of your listeners have fallen prey to this same, um, if this sounds familiar to any of you, quarter ounce gold coins between 9 and 1300, silver coins that average between 60 and 120, reach out to Miriam. Miriam, reach out to me. We'll tell you what to do, what to say, how to approach it. But when I tell you it's the most horrific thing I've seen in 35 years, I'm not joking. I'm not being sensational. And they pick on elderly folk through their IRAs who don't have the opportunity to make it back up again. It's kind of been a mission of mine. I was on Kyle Serafan's show this morning. He's an FBI whistleblower,
yes,
was
I've
in the
had him
FBI.
on.
Yeah, and a lot of this started because after talking about it on Mike's show once before, his father's best friend called me and he said, "Oh my God, you more or less said what's on my statement." We helped him considerably, told him what to do and how to eviscerate himself from this horrible position, and then he introduced me to Kyle and said, "You need to talk to other people about this, including Kyle." And so Kyle's become a friend. Um, Anyways, I don't want to belabor the issue, but if any of your listeners have fallen down this hole, let us know. We'll help you.
Yeah, and you can call me at 1-833-21 freed, which is also 7333. And let's get you help today. So I love that you help folks too who have been abused. And I think sometimes that's why people shy away from gold and silver, because they hear stories like that. But for me, I'm a researcher. I want to check things out, and that's why the fact that you have not had one customer complaint in 35 years, with 10 billion in sales. I mean, it's remarkable truly what you and your dad started in the room the size of a closet for just like the epitome of the American dream. And so that's why I wanted, to connect with you guys. It made me feel safe and protected, and protect the financial legacy, that I have tried to build. But I wanted to talk to you first, Andy, about this today, and that is the price of gold. This is astounding to me. I know, it's slowly going up, but there have been little spurts where gold has just soared in the interim here. And of course, I personally expected it when Trump announced the tariffs back in March, and we saw a gold soaring there for a few weeks, and then it dipped down. But I wanted to pull up this slide here from kitco.com, but it just is showing the level in the last 30 days. And you can see there that first rise there in the middle of March, that it's had a little increase, and then it leveled out, and then it spiked again towards the end of March, and then dipped again the beginning of April. But now we're seeing record highs again. And just today before we started the show, I pulled it up, and it was 32.2690 an ounce gold was. And so I guess I just want to ask you. I expected it that after the tariffs, but do you have any in your with your research? Do you have any idea why we're seeing a spike like that again in April, or do you feel like gold is running away right now because of all of the uncertainty?
It's being massively accumulated by the biggest money in the world. Since November, the United States has become a net importer of gold. We've imported somewhere in the neighborhood of 60 million ounces of gold since November. Largest deliveries in the history of the COMEX market ever. The largest deliveries last month. JP Morgan delivering 4 billion in gold to the COMEX on behalf of a customer. Which customer has that kind of
Mm.
money? You are seeing, look, it's the only other tier one reserve asset in the world next to US Treasuries. And not only are we seeing massive deliveries, but we're seeing what's called repatriation, where we are seeing the countries that have held gold traditionally in the Bank of England, which gives access to the LBMA, the London Bullion Metals Association, the oldest gold market in the world, and in the Bank of New York Federal Reserve to give access to the COMEX. These are the two price setting mechanisms of the world. Over 40 countries have brought back their gold. They don't trust the system any longer. And these deliveries are very rare. What is unusual now is that these contracts never stood for delivery. Less than 1% in both London and in the United States, we saw deliveries. Now these deliveries are off the charts, and these family offices, sovereign wealth funds, and central banks are saying, no, we'd rather have delivery. Thank you very much. It's exposing the system. Give you an example. The LBMA is, the largest market in the world. They're what's called a T+1 settlement. T is trade day, plus one is the settlement day. So Monday you do the trade, plus one is Tuesday. On Wednesday, the metal should be heading your way. And all of this metal was under the guise of the faulty guys, which I said all along, they're not going to tariff gold. But they said they would. So all this gold was coming back into the vaults. We got to cover our short positions. The commercial banks would say there's tariffs, send it back. This game of going back and forth has been going on forever. It's reshoring. It's not because of that, because what has happened is the Bank of England figured it out, and they're like, "Oh, wait a second, this isn't tariff. Something's going on," and they halted. And instead of T+1, they're now T+8 weeks, and they say it's a
Wow.
shortage of trucks and manpower. So you're telling me that the Bank of England doesn't have enough trucks. So imagine you have a multinational jewelry company and you fabricate jewelry around the world, and you have contracts that give you the ability for 3-day delivery of metal, and you need it for your business. Sorry, Miriam, it's going to be 8 weeks. We don't have enough trucks. Something very big is happening. Gold is the only other tier one asset in the world. The central banks are buying it off the hook. They're repatriating it. They're draining the LBMA. Now, there is a rumor. I'll tell you what the rumor is. The rumor, and I can't substantiate it, is that Trump believes that the European aristocrats were behind the color revolution here in the United States and in Europe, and also any election interference. He believes it came from them, and he's getting them back. That's the theory. The theory is that the banks here, the United States commercial banks, have gone long in London and leaving the big bullion banks, the European banks, Deutsche Bank, UBS, Standard Charter, all of these banks exposed to this massive rehypothecation. They have only 36 million ounces of gold in London standing behind 280 million ounces in spot contracts that could stand for delivery. And if more than 36 million stand for delivery, we got a big problem. And so it's exposed this scam that the other countries, the BRICS nations that I said on your show forever, have been exploiting. Well, I think the Trump administration said this is a problem. We need to get as much gold back as fast as we can, and silver, because the rest of the world is exploiting the delivery mechanism, because the West has been suppressing gold forever to make the illusion of a strength of the bond market, strength of the currency, strength of the Western system. You can't have gold going to the moon because it signals trouble with the underlying system, especially when you suppress interest rates. So, anyways, the bottom line is the fact that all of these entities are standing for delivery has exposed the underbelly of this beast that is now in. There's an existential threat to some of these banks, and I don't think we've seen anything yet. Miriam, you got Goldman Sachs that just came out and said gold could go as high as $4,500 this year. $3,700 is what they're calling for, but as high as 4,500. So I don't think we've seen anything yet.
Wow. Well, on that note, we're going to head to a break, and then I want to talk to you some more about this on the flip side. So don't go anywhere. We'll be right back.
You're still looking good.
I'm still feeling good. You know, I've got all your MyPillow products. Mattress topper, bed sheets, MyPillows, towels, slippers, blankets.
I'm interrupting this commercial to do something I've never done before. Get 2 MyPillows absolutely free on orders of $100 or more. I can't do this forever, so get on board with this great sale today. Our best-selling 6-piece bath towel sets or kitchen towel sets, just $29.98. Our famous standard MyPillow is only $14.98. Queens $18.98. King size only $1 more. Body pillows $29.98. Multi-use MyPillow 2.0s with pillowcase $9.98. Save $40 on our Spring Percale and Giza Dream bed sheet sets. Any size, any color. So go to mypillow.com or call that number on your screen. Use your promo code to save up to 80% on all MyPillow products. And when you spend $100 or more, get 2 standard MyPillows absolutely free.
Welcome back. And, hey, that's a pretty good deal to get some free pillows. I don't know about you, but my child just the other day was like, how they jump on your bed and they come in your room and he's like, Mom, your pillow. And I'm like, I know. I need to get another one. So, that's a really good deal. And Mike Lindell is a great patriot, and he has sacrificed so much to look into election integrity, to fight for that. And so that's one way that we can vote and support fellow patriots, is where we put our money, not just buying gold and protecting yourself, but what you purchase also helps other patriots. And it's a win-win. You get a great American-made product and you're helping another patriot. And when you use the code MISSION, you're saving money and you're also supporting the Mission for Freedom podcast. And for that, we're real grateful. So just go to mypillow.com and use the code MISSION. Andy, welcome back. I want to have some questions. Our producer, Annie Cyrus, is going to share some questions with us today that we can address. But before she does, I did want to touch base with you on one more thing. As you're saying this, the repatriating of gold, we're talking about these things that have never happened before. The United States being now, since November, a net importer, all these things kind of like, hey, it's thundering and lightning. You might want to take an umbrella when you go out, go outside. It's like, hey, we're seeing all these signs we've never seen before. We might want to have some hard assets like gold and silver. So I think my question for you, my concern is that when central banks, who are supposedly, the most well-informed, right? You've always said that when the central banks are short on equity and they can't print their way out of it, and they can't go to governments. I mean, most of the G7, I've learned that, they are compromised as well, except maybe Germany. But if they can't go to the governments to help them out, I mean, what happens when the central banks are short?
That's a problem, and that's the whole issue of being naked short. See, there's something. There's two ways that you can short. I use the COMEX market. Here's two glasses cases. Okay, let's say this represents 5,000 ounces of gold in my warehouse, and if the price goes down by $100, well, I just lost a $500,000. So what I do is I sell the same amount on a contract with COMEX short. So if the price goes down by $100, I'm down 500,000 on my physical holdings. But what I sold short on COMEX goes up by 500,000. It allows me to be market neutral with my inventory. That's called a covered short position. I have the gold behind it if I had to deliver, because when you go long, the other side is short. If someone shorts a contract, someone goes long on the other side. And one of the things you can do when you go long is request delivery. I would like delivery. I don't want to cash settle. So if it goes to maturity, you can stand for delivery. A covered short, you have no risk. You have items you can deliver. A naked short means it's a speculation. Well, I'm a bullion bank. I have enough money. I'll short the crap out of the price because I have enough money where I'll just force all of these positions to capitulate. And I'll give you an example of what that means. So the price of gold fell when I was in Europe about 2 weeks ago by $200, if you remember. What had happened at that time, there was a massive long position by the managed money, the hedge funds, and the commercial banks who are trying to get out of these positions. I think they realize this is a do or die moment. So they knock the heck out of the price of gold by selling paper onto the market to drive the price down. And 28,000 gold contracts at 100 ounces a piece. That's 28,000 times 100. All right. So let's do that and multiply that times 32.25. That's $9,030,000,000 worth of gold was forced to cover, because these hedge funds are like, the price is falling. If we don't cover, it can keep on going. We're going to get crushed. Let's just cover and call it a loss. Well, the minute they did that, so that the commercial banks who could have actually been forced to deliver that gold because it was naked, they forced the price down so much that the hedge funds capitulated and covered, which means they bought back their contract. The minute that happened, the price of gold went up by over $200. And so they shook all of the weak-handed money managers out of the trees, pickpocketed their positions, and the price spiked after they fell out. So basically, having these naked short positions without the ability to deliver, if called on to deliver, is an existential threat. That's exactly what we're seeing in London. And this is probably why the Bank of England said, yeah, we're going to have to, the LBMA said, well, we are a T+1 exchange where you're supposed to get it really in 3 days. But guess what? It's 8 weeks now because we don't have enough trucks or manpower. And, if you believe that, well, I got a bridge to sell you, but what are you going to do about it? So this is exactly what you're talking about. And something similar happened on the COMEX in 1980 with the Hunt brothers, who saw all these contracts, not enough bars behind them. So they bought up all the contracts and stood for delivery. The COMEX changed the rules. Now, the difference between the COMEX and the LBMA is the COMEX is an exchange, and there are rules in place to protect the exchange. They can do that. They said, well, we're going to change the rule. You can be short as much as you want, but you can only be long a certain amount. So all of the contracts that they bought above that amount had to be sold. Price collapsed. In London, it's what's called an over-the-counter exchange. There is no central clearing authority. There is no exchange. It's like eBay almost. There is no one to cover your loss. And so these players, if I have an agreement with you and I default, well, that's a problem. So all of these contracts in London, in essence, are hanging on by a thread. If they're trading in silver right now, 2.9 billion with the B ounces of silver per day, they only have 260 million ounces of silver available that could be delivered. They're trading over 10 times the amount of silver they have every single day, which is 3.5 times the annual global mine supply. They have 36 million ounces of gold standing behind 280 million ounces in spot contracts. 9 times as many contracts as there are bars. Do you see a problem when these countries say, no, we'll have delivery? So the U.S. started delivering it all, saying it's because of tariffs, but it wasn't. There's something bigger
Mhm.
going on here. All that gold comes back and keeps coming back, and Bank of England says, "Oh my gosh, you guys, we're you know what? We're in big
Mhm.
trouble.
Mhm.
We better lie and say not enough trucks in London these days, so we're gonna have to put an
Mhm.
8-week delay on that delivery." So
Yeah.
yeah, it's a problem if that happens, and that's almost what is setting up here in the background. We'll have to see how it plays out, but a lot of people have surmised that maybe this would happen one day. Seems to be setting up for it possibly to happen. Not sure if it
Yes.
will, but it could.
Well, we have a lot of questions flying in here, and
Let's
I want
do
to
it.
try to get to them all. So, Sound Savvy says, Andy, if gold is breaking all time highs, what does that say about public trust in fiat currencies? Are we seeing the beginning of the end for the dollar?
It doesn't say anything for public trust. The public is oblivious. What it says is central bank trust and other government trust, because the public is still asleep at the switch. This massive accumulation of gold and driving up of the price has been attributed largely to the central banks and the sovereign wealth funds, who are central bankers wearing different hats, and the family offices. You're talking the most sophisticated money in the world, who sees things clearly. At the same time, everyone in this country is enamored with the Mag 7 and crypto and all this stuff. You have the hedge funds, which have their lowest exposure to the Mag 7 in over 2 years. You have the insiders selling at a 7-to-1 clip, the big insiders. You have guys like Warren Buffett with hundreds of billions in cash, who's the greatest value investor of all time. Who's the customer for JP Morgan that bought 4 billion in gold? They said it's for a customer. Who is that customer? Who's got 4 billion? So the biggest, most sophisticated money in the world is not in securities, and the public is. At the same time, the biggest, most well-informed and sophisticated money in the world is gobbling up commodities like gold, and the public isn't. So the public is asleep, and that's normal. The big money is always 3 steps ahead of the little guy. So yeah, this is a situation where ultimately there will become a big concern over currency, because look, we have 6 trillion in treasuries that come due next week. We have 28 trillion in treasuries that come due by 2028. 28 trillion. We take in 5 trillion a year in tax revenue. That's 15 trillion in 3 years against 28 trillion in maturing treasuries. Problem there, you're halfway there, but that doesn't take into account the deficit spending this year, next year, and the following year. We're already at $1.5 trillion in deficit spending this year, and they want to do $1 trillion military budget, which is discretional, which means you have to borrow it. The Congressional Budget Office just came out and said by 2031, 100% of tax revenue will go just to pay the interest on the debt and mandatory entitlement spending, which is off balance sheet. Medicare, Medicaid, Social Security, the off balance sheet obligations are about $180 trillion. And that doesn't even take into account the nearly $37 trillion national debt, which is on balance sheet. In other words, we're broke, we're insolvent. And by just a few years, every penny we take in tax revenue goes just to pay the interest on the debt. Heck, we don't have enough in 3 years to cover the debt that's out there, let alone everything else that we're doing. And so it's really a crazy environment where if people really understood it, if this was your own personal finance, maybe you'd understand it. But the media does such a crummy job of telling us what's really happening. If people really understood how indebted we truly were, they would run as fast as they could from the dollar. The wealthy people in this country don't have gigantic bank accounts. Yeah, they might have gigantic by some people's admission. What they have gigantic is gigantic amounts of assets, because
Mhm.
assets, and this is the Cantillon effect, which says the people closest to the money supply, especially during inflation, benefit disproportionately because they buy up the assets. And in that environment, assets go up, but the cost of living goes up for everyone else, who benefit disproportionately. So yeah, you're seeing a situation where the rich get richer, the poor get poorer, and the world is saying, what the hell do we want dollars for that are being inflated away? And what do we want treasuries for, which can be taken from you, weaponized, and inflated? And then what we saw last week was something very strange. We saw the S&P fall 8 or 9%, and the Treasury market yields rise by 80 basis points. It's supposed to go the other way. In other words, if the market is falling, people are supposed to run into treasuries for safety, which would push yields down. The fact that they went up created a massive problem. It's called the basis trade, where hedge funds are speculating, and it's this close to blowing up the bond market. It's a very tenuous situation right now, to say the least. Long-term capital management, the big hedge fund in 98, 99, these were all Nobel Prize winning economists that were doing the same thing with the basis trade, and only to the tune of billions of dollars or hundreds of billions, a fraction of the trillions that they're doing now. And the Fed had to come in to bail them out or would have blown up the whole system. What you see right now, because of the Dodd-Frank Act, these banks can't do speculative things. So they buy treasuries and then they short the treasury futures, which has a little premium to it. And they capture that spread. Well, they lever it up the yin yang. And it's this close to blowing up the bond market. That's what we saw last week. Everything is on razor's edge right now. And maybe that's why the big money is getting out of equities. Maybe that's why you're seeing such a rush into physical commodities and taking possession of them. These are crazy times, Miriam, for sure.
Yeah. Oh, sound savvy. Thank you for that. Now let's go to Josh at Josh Ram. He says, with gold skyrocketing and the Fed cornered, is there any chance the U.S. will ever return to a gold standard, or is digital surveillance currency the real plan?
This is Judy Shelton. I interviewed Judy, and her book is Good as Gold, and she advocates for issuing 50-year treasuries backed and redeemable in gold. And she said she was Trump's nominee for the Federal Reserve chair in 2016, and many think she'll take that when Powell resigns or when his tenure is up. And she said, Trump told me, Andy, he told me that on July 4th, 2026, he'll issue those gold-backed treasuries. So while that isn't really a gold standard, it's a quasi-gold standard. And of course, the BRICS, which I've talked with you about forever, the head of the New Development Bank, Dilma Rousseff, who was the former president of Brazil, said the BRICS have agreed in principle to a new settlement currency, not a common currency, but a settlement currency, 40% gold-backed, redeemable by central banks on demand, which again, we're moving closer and closer and closer to re-pegging gold to a monetary system. If Judy is right, if Delma is right, then the answer is yes. We're moving closer and closer and closer. It'll be a marriage between blockchain technology and gold because trust is gone. And how do you get people to buy our treasury if we're going to print it away and inflate it away and sanction it? I mean, who wants it? Well, if it's redeemable in gold, maybe. Judy then said she would expect to see stable coins issued off of the gold-backed treasuries. But the answer is yes. It's the only other tier one reserve asset in the world. Why would the most powerful bank, the BIS, central bank or central bank, reclassify gold as the only other tier one reserve asset in the world next to treasuries, and then see the central bank buying that's gone on since 2017 that has not abated, and now the repatriation, and now the draining of the LBMA, and the massive deliveries, and the U.S. becoming net importer, and Judy say back the treasury. I don't know about you, but you put all these pieces together, which in and of themselves are compelling, put them together, it's like, whoa, yeah, I think it's highly probable to some degree.
Well, to make international settlements doing that, I think that we can kind of follow them and do, what they're doing because they have the most knowledge of what's going on. Sir Alfred says, have Andy ring the bell on silver shenanigans.
Silver shenanigans. I really do believe that it is the military industrial complex, the massive need for silver to make high-tech weapons. I've told you before that I have a client who's a DoD consultant who helped design the Tomahawk missile, who confirmed with me 500 ounces in the tip of a Tomahawk. And all of these high-tech weapons, they took military use out of the supply-demand numbers that are shown by the Silver Institute. And so if you think about it, BlackRock, which more or less is the military industrial complex, owns all of these military contractors. Well, they're the ones that make the bombs that they give to the Ukraine to blow up the Ukraine and to blow up the whole everything. And then who gets the contracts to rebuild it? Well, it's BlackRock again. So in order to build the bombs, to build the high-tech aerospace, to do all the things the military needs to do this, they need to keep silver cheap. Well, that was the case until now. All of the world, like China and India and Russia in particular, have rang the bell themselves and said, hey, This is something that we're going to exploit. You have China, the second largest producer of silver in the world, flying all around the world right now, buying up doré and concentrate directly from miners. The concentrate's a byproduct sludge of the mining, and the doré are crudely refined bars that they fashion before sending them in for full refining. Well, they buy them right from the miner to disintermediate the market. This is the second largest producer of silver in the world doing this, shipping them back to China to refine them. India has imported almost 900 million ounces of silver in the past 4 years. That's more than the LBMA and the COMEX combined. Russia is now adding it to their strategic stockpile. 50 million ounces of silver were delivered on the first day of the March contract into the COMEX. Silver is a strategic metal. Positioning is happening. I expect to see it explode higher. Hold on. Have your strong fingertips. Don't let go.
Yeah. We have to go to a break again, unfortunately, but when we come back, we will answer some more questions. I want to touch base with you a little bit more on silver, so don't go anywhere. We'll be right back.
Well, hello everybody. It's Andy Cyrus. Welcome to my art studio where all the magic happens. This is the station for painting, and that is the station for all the resin art I do. If you want to check out my art, all you gotta do is go to lutfstudio.com. Finish this painting, but I'm sure, or at least I hope, I'll see you at lutfstudio.com.
lutfstudio.com. Welcome back. You need to head over there. Use the code MISSION. I'm telling you what, there are so many things you can find there. And Annie Inez is what I call her. She is a master of resin art. So the beautiful part is you can customize anything with colors or materials, and there's pretty much nothing she can't do. I know she's going to say, don't say that, Miriam, but I believe she can do pretty much anything. So lutfstudio.com, head over there and use the code MISSION and email her. If you're not seeing something you want, give her an email, give her a shout. She can call you or email you back and get you going on something that will be a really beautiful piece for your home. Andy, welcome back. I wanted to just weigh in just real briefly because we have a couple more questions I want to definitely make sure to get to. One from the Marie Oaks I want to get to next, but thank you, the Marie Oaks, for joining us. I wanted to just weigh in on the silver shenanigans question too, and that is that I've heard you talk about this, that the ratio between silver and gold, and I know there are different ratios, God's ratio, different ratios, but you've talked about it being 42-1, and silver right now is under that ratio. So, I mean, even if it were to catch up to that 42-1 ratio, it would soar pretty quickly. But you've even talked about different ratios that if silver were to reach that, it would just skyrocket. Okay, well, we are having a little bit of technical difficulties right now, but I did want to talk to Andy about that because I've heard him talk about this ratio and that right now silver is undervalued. And because of that, I want to head over to the Marie Oaks, your question. And you said you would love Andy's thoughts on whether gold hitting an all-time high is actually too late for average investors to act. And regarding gold and silver and investing, because of silver's undervaluation. Oh, okay, Andy's back. I'm going to have him answer this real quick.
That.
No, you're good.
So,
you're good. That's how you know it's live, you guys. You get to ride with us through the technical difficulties.
Ask me that question one more time, please.
Yes, sir. So we're going to go to the Marie Oaks, but real quick, I was asking you about regarding Sir Alfred's silver shenanigans question. Real quick, I just wanted to mention that I've heard you talk about the different silver ratios, God's ratio,
yes,
things of that nature. And so, but right now, the one that you hear the most is like 42-1, and silver is under that ratio right now. So if it even caught up to what's gone on for 200 years or what have you, silver would soar pretty quickly.
Yeah, the 42 to 1 is man's ratio. The 7 to 1 is God's ratio. And, it was 16 to 1 for 5,000 years, meaning 16 ounces of silver would be equivalent to 1 ounce of gold geologically in the mining ratio. And even when Sir Isaac Newton was designing the structure for the mint hundreds of years ago, he chose a 16 ounces of silver equal to 1 ounce of gold. It's been that way forever until even in the Industrial Revolution, somewhere around that time it was still 16 to 1, but a few years into it, because of gold's role as money, particularly in silver, more of an industrial, the average price ratio has been roughly 42 to 1 on average for the past 150 to 200 years. But now it's coming out of the ground at 7 to 1, and that's because it's found in nature in a form called epithermal, like your skin is epidermis. Epithermal means very near the surface. It's depleting in nature. So, yes, it's coming out of the ground at a 7 to 1 ratio, yet because of the shenanigans by the bullion banks in the West, it's 100 to 1 roughly. It's the most undervalued asset on the planet. So, if you were to buy it at 100 to 1, or let's say you had gold and you traded an ounce of gold into roughly 100 ounces of silver, minus the premium and everything, it'd be 95 ounces or whatever it is, call it 100 ounces. If all that you needed to do was to get back to 200-year averages, which would be the average price, which isn't hitting a home run, you make 120, 115% return. In other words, you only need 42 ounces of gold, silver to get back your 1 ounce of gold that you got 100 ounces for when you traded it. So you get two, which would be 84 ounces, and you still have 16 ounces left. So it's that overvalued, but that at 42 to 1, you're still 6 times higher than it's coming out of the ground at. And this is what happens when you mess with Mother Nature and you suppress the price. The potential is extraordinary, and we call that asymmetric. The downside risk versus the upside high is asymmetrically in favor of silver to a level I've never seen before. You have the lowest downside and the highest upside of any asset I've ever seen. So yeah, I would say to you, it's as good as it gets, really.
Yeah, I mean, just that lack of liability. I mean, that's just such a blessing to be able to have just nothing but upside. I mean, it's not rocket science. It's kind of a no-brainer to purchase silver, obviously, and gold. I wanted to get to the Marie Oakes question. She said, would love Andy's thoughts on whether gold hitting an all-time high is actually too late for average investors to act.
I don't think so. I think it'll go higher than anyone thinks possible. I think there's better value to be found in silver and then trade to gold when that ratio corrects. It doesn't matter what the gold price does if the ratio between the two corrects. If you can buy it at 100 ounces of silver to 1 ounce of gold, instead of buying 1 ounce of gold, buy 100 ounces of silver. And if the ratio corrects just back to its 200-year average, you'll end up getting 2.15 ounces of gold back. That's a better way to play it. But you can also buy fractional gold. You can buy 10th ounce, quarter ounce, half ounce. Yeah, it would have been better to buy it earlier, but for those Bitcoin enthusiasts, is 85,000 too high? It was just at 120. Was that too high? I remember when it was 400, and one of my associates was telling me to buy it. So, what about the Dow Jones? I started in this industry; it was 2,100 in 1989, and watch it go to over 40,000. Is it still too high? So, no, I don't think it's too high because the price has been suppressed for so long to maintain the illusion of supremacy of the Western system. There's a term in economics called Gibson's paradox, which speaks to the inverse relationship between real interest rates and the price of gold. So if you suppress interest rates to make everyone think they're wealthy in their 401k and in their house and whatnot, you have to kill the canary in the mine shaft. That's the price of gold. Nobody knows what the real price of gold is. And quite frankly, it should be a whole hell of a lot higher in my mind. So yes, it's high. Yes, it's at all-time highs. And yes, it would have been better if you'd bought it before. I still think it will go higher. And I think it'll go higher than people think possible and be pegged to a new system, as Judy Shelton says, as many people are calling for revaluing the price of gold, including the head of the Bundesbank, the head of the Dutch National Bank, and including Senator Loomis for Wyoming, who is talking about revaluing gold. So look, silver's a better buy, but no, I don't think gold is too high at all. Quite to the contrary.
Yeah, I agree. I mean, the bottom line is when it's revalued or even just in time. I mean, you always want to get in, and I will go to I will talk about this comment till the day I die. But when you talk about the fact that gold, it is wealth, it's not money, it's wealth, and you just want hard assets to protect your legacy, your financial legacy. But truly, when you compare it to the S&P 500, I believe you said over the last 20 years how it's outperformed it. I mean, there's no downside to this, and it's just completely logical. You would, if you had an investment that pretty much had a guaranteed upside with a liability that's severely limited. I mean, it just is not rocket science to at least have some of your money, and then it's a hard asset on top of that. It just it makes no logical sense to not put some money into precious metals.
You talked about here saying that you put your IRA into gold. I remember when you did that, and it was probably hard to do because at that point gold was very high. But look how much it's appreciated since then. And so the point
And
of it isn't that past does not equal prologue, or prologue does not equal. I'm try. Past does not equal prologue. In other words, it's not guaranteed that that's how it'll happen. But what I'm simply saying is that I believe it'll go higher than anyone thinks possible. I remember the first conference I did in 1990. The Dow Jones was 2,100, and there was a guy saying it's going to go to 10,000. He was laughed off the stage. So, markets tend to move higher than anyone thinks possible. And conversely, the Nikkei was 41,000 then, and they owned Pebble Beach and Rockefeller Center and casinos in Vegas and made anything with a engine or a motherboard better than anyone did. And they came back and it touched its high back then recently, maybe a few months ago, and then fell off again. It took 35 years for it to come back for a second. And right now, let's see, of course, when I want to, let's see, what is the Nikkei today? Nikkei is 34,000. So it's still not back. It touched it for a second, like 39,000, 40,000, and fell off again. So here we are 35 years later, it still hasn't come back. The point of it is that bull markets go higher than anyone thinks possible, and bear markets go lower than anyone thinks possible. And when the central banks are buying gold at a level the world has never, ever seen before, continuing to do so, I would say there's still a long ways to go because it will be pegged. If Judy really wants to peg gold to 50-year treasuries, the price has to be much higher. And maybe that is what they have planned, to let it run and maybe even to revalue it. Because how many people know that every Western central bank balance sheet holds gold in what is called the gold revaluation account? Can't make it up. Maybe they'll revalue it to a level higher than people think possible. To peg it to a new system, after all, would only benefit the central banks, which every central bank in the world has been buying gold. And I don't know, it just seems logical to me.
Yeah, and I'm so glad I have some. I slept like a baby. I remember that process last summer, and I was stressed, and I was watching the price, and then finally, I was stressed before I did it because I really felt God telling me to do that. And it's just so interesting how the media and the government, I mean, they really are shoving this propaganda down our throats like this is such a crazy thing to do. And I've watched the price of gold just soar, and I've slept like a
It's up
baby
almost
since then.
50% since you did it. So, I mean, and at that
Yeah.
point, it was at all-time highs at $2,200. So,
Mhm.
and here we are at almost 3,300. So, you know,
Pretty
um,
good. I know you say it's
yeah,
not investment, but that's a pretty great return so far.
yeah, but what it is wealth,
Yeah.
and the biggest money in the world since biblical times have been accumulating it. I did a conference in Ottawa. It was kind of a woo woo conference of Jean Claude and mystic stuff, and but yet part of my presentation was how gold was used in ancient Egypt 5,000 years ago. How the heck did they know where to find it, how to mine it, how to refine it? How did they know how to make with perfect symmetry King Tut's mask with technology in terms of fabrication that rivals what we see today? What I'm simply saying is there's something special about gold. There has been for all of time, and I think that's coming full circle. And I don't mean to depart from reality here, but all I'm simply saying is that for all of time, gold has been unique and special. And because of the Western system, um, it got cast aside because it's a tether to doing sound money, to doing things prudent. And we've cast that aside in favor of a system that allowed these central banks to create an environment that we are now having to pay the price for. And so I think gold should be in everyone's portfolio, everybody's. portfolio. And it isn't to me an investment, although as you see, it can certainly perform as one.
Yeah, I just you better believe I told everybody about that. I thought it was pretty exciting. At the Kate Crosby, welcome in, and she asked the question, Andy, what would you tell a young person who wants to hedge against what's coming but only has a few $1,000s to move?
I'd start by paying yourself first every single time you get paid. I don't care if it's $10. Do what you can. Remove as much variable rate debt as possible, and pay yourself first. Because a young person, I'm still a young person in my mind, and how all of a sudden I'm 54 years old. I have no idea how that happened, and I still feel like I'm, the same silly kid that was 19 with a leather jacket and a motorcycle. I was cool back then, and but I'm not anymore. And the best advice that I was ever given was by my father when I was 19, and said, "You will buy every 2 weeks, or I'll fire you." That was the only commitment, as I've said on your show, and it was the best gift he's ever given me. I have bought something every 2 weeks for 35 years, even though I own the company. He won't fire me anymore. It instilled upon me the importance of speaking to myself 35 years into the future. And I say, hey, man, you got 3 kids, you got 2 girls, so you got 2 weddings, you got 3 college educations, you got a wife, you got life, man. You better start saving. And I did. And it was the best gift my father ever gave me. And it taught me how to let the laws of compounding work for me rather than against me. And whether it be a $10 bill in a jar, which would be better if you could buy $10 worth of silver. I'm the US contact for Glint. And although I think physical metal is better than Glint, I still like Glint a lot. And Glint is a digital program that you have and download at the iTunes store. And you can democratize this gold and silver. You can buy $1 worth, and it's held in Brinks, Switzerland. You can spend it on a MasterCard. If any of your people would like to sign up for Glint, just when you sign up at the App Store, type in Andy ANDY 24 in the coupon code, and you'll get a free MasterCard sent to you. But it allows you to buy, if you want, $10 worth of gold, $5, $1, silver or gold, and it's on your iPhone. You can spend it, you can liquidate it, or you can cash it into physical gold with me. What I would tell people is accumulate assets and do the best you can to stay out of debt, even if it means living, not keeping up with the Joneses for a while. It's better to have peace of mind, because Father Time catches up to us all, and that's why having something, a regimented plan. It's like working out. You don't
Mhm.
get in great shape by working out hard for a week. You do it by working out hard 4 or 5 times a week, every week for years, and then all of a sudden you look in the mirror like, yeah, I look good. Well, that's the exact same thing with saving. That's the exact same thing with anything. It's being committed, regimented, and that's the best advice I could give.
Yeah, we're still working on that concept with my son because he works out a couple of times and then does the gun flex and asks me if he looks bigger. I'm like, probably more than 2 times you're gonna have to do that, and I think sometimes we Americans are like that even with investing or anything. We want to get rich quick, we want a sexy stock that's going to, have a really great return very quickly, and really it's that whole turtle versus the hare kind of thing. So, we're running out of time, we just have a minute left. Andy, how can folks connect with you? I know you have an amazing podcast that I learned so much from as well, little by little, so I just wanted you to share with folks how they can connect and follow with you.
Well, and it's important if people do connect with us somehow, and it's best to connect with you, of course. But if
Yes.
anyone sent us an email that at info@Miles Franklin requesting the same price list that they would get from you, if that were to happen, make sure that they put that it came from this show, and you'll get all the credit for it. But you know, in general, I'm everywhere on YouTube, and I'm easy to find. Our website is milesfranklin.com, but contact Miriam. The price list that she will provide for you is far better than what you see online. It'll be as good or better than
That's right.
anywhere in the United States. And, if people want to reach out to me, info@Miles Franklin, any questions you have, I'll respond to them.
Yes, and you can call me at 1-833-213-7333 or 1-833-213-FREED. That's the past tense of free, freed. And then you can email if you're more into that, Mission for Freedom podcast at gmail.com, Mission for Freedom podcast at gmail.com. Andy, thank you so much. We are out of time. Thanks for joining me. Until next time, God bless you. Stay in the fight and have a great day.